It's time for stock picks. Fishing group Sea Harvest, food manufacturer RCL Foods and packaging manufacturer Nampak are up for analysis. Anthony Clark from Small Talk Daily Research joins us with his assessment of these stocks. Anthony, thanks so much for your time this afternoon. So focus on local stocks. Let's start with Sea Harvest. The group released a disappointing trading update last week, warning of an earnings decline of up to 47%. One of the factors it pointed to was downbeat hake catches. This, however, one of your picks. Are you saying we should buy into the dip?
Yeah, good afternoon. It's nice to be back. I think when we discussed the top stocks or the selection to this week with a myriad of different touch points, I think Sea Harvest came in at the disappointing end of the range. Now, this is a company that listed back in 2017, has probably spent about 2.8 billion rand buying a number of transactions in this country and in Australia. And frankly, for the last 5 consecutive years, hasn't delivered. And I think the institutional market is now getting a bit fed up of backing management, and you just aren't getting the results. And with the trading update or profit warning that came out last week, which, as you said, saw the year-end results to December down up to 47%, the share price, quite frankly, was massacred late last week and is now touching a low of 685. So could this possibly be the bottom? Well, I've said that for the last couple of years, as have the large shareholders, and we've been consistently wrong. Sadly, inside Sea Harvest, they've got the fishing operation. They have an operation in Australia and, of course, a very large dairy business called Ladysmith. And it's a bit like a Swiss watch. When all the parts are moving, the watch is accurate and gives you great time. If one of the cogs suddenly goes awry, the results go awry. And that's exactly the case of Sea Harvest. There's never one particular year when the company is firing on all cylinders. Something always creeps in to basically slam the numbers. And we saw that again this year on the hake side, on the fishing side, and of course on the abalone side going into the Far East. So Sea Harvest, whilst it looks cheap, we need concrete evidence that debt will be cut. Debt is currently 2.8 billion rand, given a market value of 2.4. And as I said, with 5 sets of disappointing results, I have to wonder how much more patience the market will have with the stock going forward.
So approach Sea Harvest with caution, you're saying. So how does it then fare up against, let's say, an Oceania?
Yeah, that's a chalk and cheese situation. Inside Oceania, the largest contributor to profits there is their Daybrook US business, which produces fish oil and fish meal into the global marketplace. And that's done fantastically well, as the international dynamics of fish oil and fish meal have been in flux because of the Peruvian market, which is the world's largest producer. Domestically, we all know their Lucky Star canned fish brand, which is a power brand in this country, and their actual fishing operation is probably less than 10% of the business. So in terms of chalk and cheese, Oceania is far more a branded international business, which has a little bit more, I would say, sustainable consumer demand, whereas Sea Harvest is sadly drawn to the vagaries of Mother Nature and how the fishing season goes. And sadly, for the last few years, the fishing season has not been good domestically because of the weather situation, and because they've invested heavily in abalone for the international markets, that has also not gone that well. So sadly, in Sea Harvest case, lots of deals haven't paid off yet. Hopefully someday they will, but right now they just aren't shooting the lights out, and that's endemic in the trading update we saw last week. So could be interesting, but I think management will have a great deal of convincing to do with the results presentation due out in early March.
All right, let's move over to your next pick in the consumer goods sector, RCL Food. That company also out with a trading update late last week. They're expecting double-digit gains for the half-year period. Take me through your analysis of that counter.
Yeah, again, for those that have covered RCL Foods, and I've covered the company now for the best part of 30 years. You know, the share price for 20 years went basically nowhere. You could have bought this stock 20 years ago for pretty much the same level as it is today. It's only in the last 6 or 12 months where management have gotten to grips with the company. They've been selling off assets like Vector Logistics. They unbundled Rainbow Chickens, which was a highly volatile cyclical business in the middle of 2024, to focus on their groceries and bakery business. They also have a very large sugar operation, which has done comparatively well. given what's been going on globally with the sugar price. So whilst the interim results showed a very good rise in headline earnings per share between 32 and 39%, and the share price on the day bounced 13%, the underlying volumes inside the grocery and bakery division still is not firing on optimal levels. It was mix and pricing changes which aided, a nice big fat rebate from a sugar levy, given that Tongaat Hewlett wasn't paying their dues, and the sugar board gave a nice big fat refund to RCL Foods, and the sugar price has done quite well. I think the market is far more pleased, if I can use a very bad grammatical term, but RCL is focusing back to a more of a foods and grocery business.
Yeah.
But we still have a fairly volatile business of sugar. And I think in due course, sugar will be divested, leaving RCL Foods as basically a groceries and bakery business. Then one must wonder what Rembrandt will do, given they own 80% of RCL Foods. There has been talk for the best part of 2 years. They will take the company private, like we did with Mediclinic. But as it stands right now, management have done a great job in cleaning up the business. It's turning the corner, and the share price, given these earnings, as I said, was up 13% on Friday. And if this is the state of the first half, the second half should be equally good, which means RCL Foods at 10.25 potentially looks extremely cheap in the Food Producers Index.
So we're running through these stocks really fast. I want to get into your last pick before we run out of time, which is Nampak. The group really making strides when it comes to its turnaround strategy, reducing debt, selling off non-core assets, and also just completing that rights offer as well. Some are calling it the comeback kit. What do you have to say about that?
It's a comeback kit of note. This is a company in the last 12 months which is up 151% in terms of its share price. Year to date, it's up 11%. The management had a bit of a speed wobble late last year with a very indifferent trading update and concerns that Nigeria would not be sold. But they announced in the last week that Bevcan Nigeria was indeed sold for 1.266 billion. They've sold their labels and barcode business for 146.5 million rand. Debt has come down sharply, and the turnaround kit, which has more operational efficiencies to come from the relocation of a plant from Angola back to Johannesburg to take advantage of significant volume demand in this country, and debt coming down and profits going up. I think there's much more to come. So even though a lot of the easy money has been made, you could have bought this stock back in 2023 for literally 200 rand. And we're now at about 460 rand. I think as the earnings start to come through, debt starts to come down, and more efficiencies and margin increase, I have a target price of Nampak of 650 rand, which might sound aggressive, but it's done extremely well so far, and I have no doubt that it'll go further. The annual general meeting is happening today at 2 o'clock. I am participating in that event in Cape Town, and I'm sure CEO Phil Roux will have much more to say regarding the progress and the uplift of this company.
Phil Roux really turning that group around. I mean, since he's taken over, you mentioned that share price more than doubling.
Yes, and I think, you know, at the end of the day, the rights issue they had a couple of years ago was well supported by institutions. There are activists involved in turning around the company. And as we all know, Phil Roux is known as Phil the Knife.
Yeah.
He goes into companies, he guts costs, he improves the profitability and the margin, and leaves the company in a much better position. And I would not be surprised if in 2 or 3 years the company would be debt-free, making a solid profit contribution, and the share price will be significantly higher than where we are today.
All right, Anthony, thanks so much for joining us and taking us through those picks. That was Anthony Clark from Small Talk Daily Research.